Some people call the IPO the Super Bowl within
Yeah,
finance and accounting,
exactly.
the day
It
of.
is a Super Bowl. You're right.
Some people also say that defending your Super Bowl championship is actually more difficult. So tell me about after IPO, converting the stocks, getting those audits done, maintaining the compliance. Like,
Yeah.
was that a big change for you guys?
So I think the biggest lift was socks.
Welcome to Controllers Classified, the podcast where we take a deep dive into the dynamic world of controllers, accountants, and finance leaders, and hear how their ever-evolving roles are redefining accounting and the future of business. And now, here's your host, Erik, Zhou.
Welcome to Controllers Classified. I'm your host, Erik Zhou. I'm the Chief Accounting Officer at Brex, and I'm really pleased to present our guest today, Angelina Hendraka. She's the CAO at Redis and has spent an entire career leading accounting across so many different companies and industries. You've spent time at financial services and SaaS, now a data platform company. And I looked a little bit into your background, right? When you were an auditor, you actually worked in biotech. So
Yeah.
really diverse set of companies there. First of all, welcome, Angelina.
Thank you, and thanks for having me. It's great to be here.
You just started at Redis. I'm really curious what drew you to the company and really what your plan is over the next 6 to 12 months there now that you've started.
I was at another SaaS company, though that one is public, Power School. I was there for over 2 years in a similar role. So the Redis CIO position kind of appealed me on two fronts. So first, it's the role itself. I joined Power School about 3 months before their IPO after a long time of them being a private PE-backed company. So I found myself really enjoying the experience of building and scaling best-in-class processes, implementing systems, looking for efficiencies, getting the team ready for SOX, and just overall rallying the team to think ahead instead of relying on the status quo. And also there's that level of excitement that comes with seeing your company go public because that's kind of the next step in their journey. So Redis is slightly an earlier stage company, not by much. So I'm super excited about the opportunity to bring what I've learned during my time scaling Power School CAO org to Redis. I actually did not know what Redis does until I heard about this role. But then I did my research, I talked to people, I found out how the product works. And I also found out that it's super popular in the developer community. So there is that product market fit, which I think is extremely important when I'm looking for my next company. Because I do believe that once you achieve that, then it's just a matter of executing on your go-to-market strategy. So your second part of the question about my focus in the next 6 to 12 months, it's really about scaling for growth, scaling for the next phase of the company, and efficiency. We have a fair idea of where the opportunities are, but it's a little bit too early right now. I'll find out more as I go spend more time with the team.
Yeah.
And hopefully in not so distant future, based on what we discover together, then we'll get aligned on the vision and the goal going forward.
I have a thing that I work through now when I think about even my team at Brex. I won't take credit for this. This was Josh Waldron. He's the CAO or the VP of Finance, I think, at Scale AI. But he has this thing. It's called People, Process, Systems. And so when I think about my org, I think about, do I have the right people? Do I have the right processes? Do I have the right systems to take all that home? And so if you were to think about those three things, like, sounds like the people are great. What about the process and systems? Like, what are the processes or systems you're thinking you want to make a change on or improve, et cetera?
When you say people, process, system, I do believe that it should be in that order, right? You need to have the people that actually execute on your vision. And then next you look at the processes, and then you can't jump ahead and look at the system because, well, you can't systematize a bad process. I mean, that's really kind of my philosophy. So as far as the processes go, the company is definitely able to close the books reliably and be able to kind of glean into the data, know what the stories are. There are definitely prevalence of manual processes. And so my focus would be to re-review the processes, make sure that they are appropriate. And if they are, then we will look at system solutions that can make it more efficient.
You said something really interesting. If you have a bad process and you systematize it, it kind of makes it worse, right? Because you've now invested all this technology to make something bad just automated, and then one day you have to unwind it. It could be pretty bad experience. I mean, from your perspective, like what are the different manual processes that you guys are going through right now that you think have the highest probability of being automated in the future?
Yeah, so I think it's probably around, the easiest or the lowest hanging fruit will be around expenses, right?
Okay.
So AP, T&E, you know, quite frankly, those are also areas where there's a prevalence of tools that can help us get there. So that would be the first thing that I look at. And then the second one will be on the billing ops area. So these are, your invoice processing, making sure that when you have an opportunity that is closed and won, it kind of, it translates itself to an accurate billing. And the third area would be around cash applications. How do you do it at Brex?
I joined Brex 5 years ago, and it was straight out of Big Four. And so it was new to me being in industry. And I talked to a lot of colleagues and a lot of people in my network about how to tackle this role and how to scale Brex from, like, we were 70 people at the time on QuickBooks. Now we're on NetSuite, much bigger team. And you know what? The answer back to me was very surprising from a lot of people. They all said, get your AP right. Get your AP, get your accruals right, get them done as early as possible in the cycle, because that's what hangs you up month to month. And it wasn't what I was focusing on when I was in the audit. I did technical accounting work. I did a lot more complex transactions. Those were all the focus, high risk areas from an audit side. But when you're doing day to day, like GL management, expenses are a vast majority of the activities at the company, and getting them right day to day really, it's what I call it is flattening the spike. Like you can't wait till the first day of the month, second day of the month. You have to think about all those expenses throughout the month and get the work done.
Yeah, no, I mean, it's interesting. You were talking about transitioning from a Big Four, where it's really heavy focus on technical accounting and financial reporting, into a controllership/CIO role, because the role is very operational. And what I learned is you need to get the transactions right,
Mm-hmm.
right? So because if you don't get the transactions right, you are not going to get the numbers right.
I had something I wanted to ask you, and it goes back to what I was saying. You have all this experience, and these were large public companies, right? So in financial services, in SaaS, you audited biotech companies before. Given like what you're saying about operational importance, do you think that's kind of like how you approach each of those jobs and why you've kind of become almost industry agnostic?
Yeah, so I mean, I do think operational accounting, so corporate accounting and finance, they are all industry agnostic, and I feel like that's the beauty of it. So to me, finance is the universal language of business, right? That has worked out for me over the years because I was able to transition across industries pretty seamlessly. Now, there are obviously some industry specific nuances. In life sciences, you have the accounting for clinical trial costs. When I moved to asset management, I was introduced to a whole new slew of acronyms and jargons. And then once I moved to SaaS, it's all about the ARR, the MRR, the churn, the contraction, the net retention. But all of these to me are just ways of measuring the state of your business using pretty much the same financial data.
Right.
So again, it goes back to my comment earlier that you need to get the data right in order to get the numbers right, in order for you to really understand how your business is going. And then finally, in order for you to be able to tell the story to the street, to investors, to analysts, and basically to people about your growth.
I really enjoy hearing that from you. Coming from now at Brex, we always talk about approaching a problem from a first principles approach. So I think what you've done is really applied first principles to each of your different jobs, right? At the end of the day to day, there's transaction data coming through. There's activities of the business coming through. It's not, specific to any one industry. And so I really appreciate kind of what you're saying here. Let's switch gears just a little bit.
Sure.
I know that you were on a panel recently hosted by Coupa. It discussed women in the workplace and breaking down barriers to success. Can you tell me a little bit about your experience there and what you think were the highlights of that panel?
Yeah, it was a great panel. It was actually part of the Coupa user conference back in April. I really had a great time prepping for it and sharing the stage with the other panelists. One pretty good nugget that I got from my one of my fellow panelists is around imposter syndrome. So it was pretty interesting, right? So most of us on the panels had what I would call a pretty traditional career, right? You graduate college, you got CPA, you spend a few years public accounting, at least for me, made transition to the industry, set in different roles, and here we are. One of the panelists did not have this traditional career. She did not come from a four-year college. She started out as an executive assistant, somehow got into an entry-level procurement specialist role, worked her way up, and then she's now a chief procurement officer at this company that was previously public, got recently taken private for over $12 billion. So it is super inspirational for me. But when she described when she was going up the chain, she experienced the biggest imposter syndrome and felt the biggest amount of insecurity when people were talking about which college they went to. And I think the takeaway from that is, as a leader, I want to try to consider people from diverse backgrounds because they bring in different perspectives, right? So they may not go to a four-year college, but that does not automatically mean that they do not have the potential to be a top performer.
And do you think being a woman impacted that imposter syndrome differently than a man? Like maybe it's even more so because you're kind of a minority group already in the field?
Yeah, so I cannot speak for her. For me, definitely as I was going up the chain, it felt like, I have to kind of fit into the stereotype of being a little bit more quiet, keeping my heads down, making sure that I actually have a work that shows my capability before I could actually speak up. Now, looking back, I probably should not have felt that insecure earlier in my career, but it's like hindsight 2020, right?
And then like what are some of the things that you think in the profession, in our functions, and maybe they're not specific to finance and accounting, but what are some of the things that we can do to promote some more inclusivity, to encourage maybe especially women to speak up more when they have, I certainly want to hear all the good ideas. I don't care if you're a man or a woman, right? Like,
Yeah.
right. Like what is it that I can do better to kind of be an ally?
For us, it starts from the pipeline. Once you have that pipeline of diverse background and experiences, then you should be conscious about trying to draw on their experiences and perspectives and actively seek their inputs. Especially at the more junior / entry level, right? They don't feel like, okay, I have a CAO talking to me. I'll probably just, agree and be okay with everything that he or she said.
Mm-hmm.
But I think it's very important to communicate that you want to hear their voice as well. And you want to create that psychological safety so nobody has to feel like they don't belong or have no business being there.
Have you seen any examples of someone who's kind of trying to break down those barriers themselves? I want to encourage really everyone the same way, but maybe I should be taking time out of my day to specifically address one person or a couple of people on the team, knowing that they may feel, whether it's imposter syndrome, whether they feel some way because they're a woman, like just sharing that.
And what is also eye-opening to me is I would like to think that I'm pretty passionate about people's development, but as things get really busy, for you and me, and we have a ton of other things that we need to take care of and a lot of fires that we need to put out, that people development aspect of your job kind of fell by the wayside. And it is eye-opening because I just did a 360. And then one of the things that came out from the 360, and you know how it is with 360, right? You open the report and then you immediately zero in on the areas that you think that you're weak at. And that area was people development. And then I was thinking to myself, like, okay, wait a minute. I am super passionate about people development because, I got here because I had mentors and I had managers that were investing time in me. So, but, I guess whatever people's perception is completely different. And it made me step back and acknowledge the fact that yes, that has taken the back seat because, I've been so focused on getting systems in place or, just closing the books or, getting the company public and things like that.
I appreciate you sharing that. I think about Brex's own growth story and then what we've been able to accomplish in accounting. Getting the close down from, call it 2 weeks, we do it at 5 days now on the accounting side. We've expanded our reporting. We have regulated statutory reports. All this required a lot of day-to-day work, and it's just like, getting stuff done, getting tasks done. And I think, yeah, like when you're in that hyper growth stage, it's obviously very important to carve out at least some time
Yeah,
to ensure that people are doing well, to ensure that people are getting what they want out of these tasks and learning a lot, to ensure that their
exactly.
careers are being developed. And a little goes a long way, I think, in this arena. So
Yeah.
that's a good reminder. Let's go back to what you were saying about spend management philosophy, and let's talk about where we're at today and even at Redis. Okay, so you just joined this company. Brex is a private company. We have 1,200 folks. We're feeling the same thing that a lot of other companies are feeling. Boards across the country are saying, let's make sure that every dollar that's being spent has the right ROI we need for this company. Tell me about how you're approaching kind of spend management at Redis.
You and I are pretty much in the same spot, right? Our companies are definitely watching their spend and their cash flows. For us, how we're approaching it is we're still making investments, but there are just a lot more strategic and thoughtful discussions around what we should be spending, what kind of return we will get from the spend. So, for example, things that will drive sales growth, absolutely. Things that are pure G&A, it'll probably be on the back burner until it's absolutely necessary. And then for us, we do start with a high dollar value spend. Being a software company, the biggest two spend is basically people and cloud. I think if you want to focus on optimizing spend, cloud is probably the one area that you should focus your time on, especially because it should correlate with the on-demand / consumption-based component of the revenue. That would be the area where you would focus on, make sure that you have the right rate, make sure that you're not being paid for what you're not using. And we actually have an effort within the company called, for the lack of a better name, cloud optimization effort.
And I don't know like which cloud service provider you have, whether it's AWS or Azure or Google. Like it doesn't really matter who it is, but like how many people do you have focused on this effort, and what's their strategy? Like what are they doing? Is it just monitoring? Is it making sure that servers are being used in an optimal way? What does that look like?
We do have one person that is almost 100% exclusively focused on our cloud spend, meaning that, if we're seeing some sort of a contraction on the revenue side, we want to make sure that we see the same thing on the expense side. And another thing as well is these cloud providers have different pricing structures, right? So it's really also looking at the pricing structures and make sure that we have the most optimal pricing structure. And that is just kind of an ongoing thing that we do.
So do you have like month to month, week to week meetings with your cloud provider? Like, oh, how much is like Amazon has an EC2 server or like this S3?
So we don't exactly have, that high touch interaction with our cloud providers, but we're basically monitoring it in the back end where, we're dialing things down as we need to. And we're basically just watching how the expense, hopefully the expense correlates with the revenue.
Makes sense.
Yeah.
I mean, that's probably the biggest line item. I mean, certainly one of our biggest line items at Brex, right? What are some of the other areas that you're focusing on?
I think procurement in general, right? I always say, to my boss as well as to my team, if you want to achieve what we call smart spending, i.e., spending the right amount in the right areas that will drive the business forward, you should invest in a good strategic procurement function. So I'm not talking about a team or a system that handles the processing of POs, so basically like pushing papers, but it's really around, is there a team or is there somebody that can take a look, identify duplicative spend across the different functions? Because, like people get pretty territorial about their decision making around what to buy from who, and there can be redundancies across the org. And then, optimize the suppliers list, and more importantly, negotiate on your behalf to get the most optimal pricing. That's really when you can realize your savings. And the reason why I think procurement is where you should invest is because if you think about your P&L, a dollar of revenue that you grow does not translate to a dollar to the bottom line, but a dollar that you save on your spend does. So, I have a pretty amazing strategic procurement person at my last company, and that was basically what she said, and it really resonates to me, and I carry it forward.
Wow. I mean, my father said this growing up. A dollar saved is a dollar earned,
There you go.
right?
Yeah.
I'm really curious. So I'm going to play devil's advocate here just a little
Yeah.
bit. And by the way, I 100% agree with you, but I'm going to play this role anyway. How can there be a procurement person that understands all the different pricing structures for different services that we might get across all these departments? Like, why do
Yeah.
we need a centralized person to do this when, this person in business development kind of knows this area the most, or these engineers kind of know the cloud service space the most? Like, where do you really get that value from? Why don't we just let the experts handle it?
Yeah. Okay. So I'll throw in two words: learning agility. So, learning agility is the number one factor in predicting success in a new environment, right? And what it means is, if you have learning agility and you're humble, you're self-aware, you're willing to learn, you're willing to ask a ton of questions and talk to a lot of people, you could probably be successful. So how we went about it, and you are absolutely right, right? Different areas of the organization have different spend. An example is my biggest spend is my audit fees. And but my audit fees is very different from cloud service provider. The procurement person that I was referring to, she obviously has had procurement background. She is an amazingly tough negotiator. And how she approaches these contracts that are about to come due and about to be negotiated is she asks a lot of questions, right? So we started her with I think some of the SaaS spend. This is back at Power School, and then she learns very quickly. And once she was successful with one contract, people started looking at her and be like, hey, you're not there to be in my way. You're there to actually help me manage my department budget. So it's almost like it's like a circle, right?
Yep.
The more she is successful, the more people are willing to engage with her. So she is not shown as a roadblock, and she's actually somebody that that helps the business safe.
Right.
Yeah. And then a few months later, I was talking to her. I was like, hey, can you take a look at my audit fees? Because we're about to sign this engagement letter. We're about to go through the audit committee. And of course, she knew nothing about professional services. So I talked to her about fixed fee, out of scope, the hourly rate, blended rate, basically kind of,
the whole black box of fees.
Exactly.
Yeah, I agree. I get it.
Yeah. Yep. And then she basically, I basically just unleashed her, and then and we were able to actually, when we were benchmarking against our peers, we actually came out pretty good.
How do you add to or support the cause? Like, what are some of the things that you've done in accounting to reduce kind of your own spend? Maybe it's like actually bringing in a system so that you don't have to hire as many people, or maybe it's outsourcing. But curious how you've done it.
What I've done in the past is leveraging our lower cost locations. So at Power School, we have a pretty robust shared services center in Bangalore, India, and it's a captive model. So these are our employees. When I came into the role, we already had a team there performing things like billing ops and collections, AP, and of course there's a separate statutory team, but they kind of do their own finance / accounting for the local entity. Now, so what I did during my time there is really expanding the scope of the team that is there by giving them higher level work. So, for example, if at the beginning, these collections folks are only dealing with what we call inside sales customers. So these are your lower end customers, like smaller dollar value. We want them to do more of our enterprise customers that are bigger, right? So you kind of give them piecemeal, like the work is still the same, but of course the stakes are higher because you're dealing with bigger customers, and then they get a lot more sensitive when you mess up, right? So really just kind of upskilling the team that you have in there. And if you have a natural attrition, then instead of immediately backfilling it in the US, really think about whether this role can be performed in India. So that was just a mandate that was given by our CFO. And, we were, I would say that we were pretty good at being thoughtful about where to open the backfills.
And then that's interesting because you guys decided to do it in a captive model. And that was because you knew that it was going to scale to this way. So you might as well just put in the work and do the captive model.
That was my second time I had an India team. And what I learned over the years is that you don't start with a captive model, right? You probably have, like 20 or 30 employees, whatever function you have in there, probably support. And you will probably want to start with a PEO model where you have an external third party that becomes the employer of record for these people here. But as your company grows and then you want to make sure that you're containing the cost, then it becomes a decision of what is my long-term strategic direction with this location, right? Do I feel like I can actually grow in this location? Does it make sense? Do I have the right pool of candidates? Because obviously you want to make sure that there are people that can do the work over there. And speaking about India, can I deal with the time zone difference? Right? Because basically, 1 p.m. here is, I think, 1:30 a.m. over there. So you are never going to overlap unless you make them work graveyard shift, right? So those are just kind of the decisions that you need to make. And once you make that decision, then you'll be like, okay, let's start growing the business there.
And then for the listeners or viewers of the show, PEO stands for Professional Employer Organization. So these are organizations whose main jobs are to be the legal employers of contractors, et cetera, that end up providing the services to your company. There's a lot of different providers out there. Let's talk about some stories from the inside, like in terms of like big initiatives and projects. So you started at Power School 3 months before the IPO. Why don't you talk us through that process? So you were there, maybe the S1 was already written or about to be completed by the time you started, or like, what was the S1 writing process like? Getting the issuance out there on the public markets, the afterwards, which some argue is even more important. What was that like?
So I joined in April of 2021. We eventually went in July of 2021. The S1 was ready. All of the SEC comment letters were already cleared. But then the S1 was about to go stale. So what I did coming in was actually updating the S1. Well, thankfully, we did not have to go through the SEC comment process anymore. But there was a lot of interactions with our experts. That was EY at the time. Our tax team, our audit team, our bankers, as well as our attorneys.
Yeah.
Right.
And for our viewers, what is the comment letter process from the SEC? Like what's the process when you write the SEC and when you write the S1, you have to submit it, and what, the SEC reviews it first? Like, how do they?
Yes.
Yeah.
That's correct. So, we have the option of submitting a confidential S1, right? So you submit the confidential S1, and then they look at it, they review it, they ask questions. Usually the questions are always around revenue, and what your policies are. What, for example, why is it gross versus net? What is upfront versus deferred, like all that. So, you have to clear that. And once you're done with that process, then basically your S1 is, your S1's there.
And the S1 is the prospectus, right? It's the document that you share with prospective investors. telling them about your company so that they'll buy into the issuance.
Exactly. And then what I was also experiencing before we went public was the process of roadshow. And this is 2021 when people are kind of, okay, do I want to do it in person? Do I want to do it online? We ended up doing it remotely. So you can imagine our CFO and our CEO meeting back to back with various investors, repeating the same stories. I don't know how many times during the roadshow. And I think what was also smart about how they approached it is we had a pretty big float. Our float is about 3.25 billion, right? So when you have that big of a float and you are not a snowflake, you want to make sure that your IPO is successful. And one way of doing that is making sure that you have this so-called anchor investor. So these are investors that are willing to have their name be put on the prospectus in exchange of a guaranteed allocation of IPO shares. And the reason why you want to do that is it actually makes your case stronger. And then people would look at it and be like, oh, wait, there is already an anchor investor that is committed for a sizable amount of the float.
And this is an anchor, like actual investor. This is not one of the investment bankers that end up
No, it's an actual investor.
Right, okay.
Yeah, I think, oh my gosh, who was it? It's this investment fund called Select Equity was our anchor. And I believe the second one was Canadian Pension Plan, CPP, which is huge, right? So what's interesting was I never heard the term anchor investor. I don't think that was the norm back in 2021. But the last three tech IPOs that we had, right? ARM, Klaviyo, and Instacart, all of them have anchor investors. And I was like, oh, hey, anchor investors. Now I know. So, but yeah, so that was kind of the process. And then, a bunch of us went to New York, and then, I was lucky enough to be on the podium for the ringing of the opening bell. So that was definitely a bucket list item.
Some people call the IPO the Super Bowl within finance and accounting.
Exactly. It is a Super Bowl. You're right.
Some people also say that defending your Super Bowl championship is actually more difficult. So tell me about after IPO, converting to SOX, getting those audits done, maintaining the compliance. Like, was that a big change for you guys?
So I think the biggest lift was SOX because PowerSchool was listed in NYSE, and I believe there is a requirement that you have an internal audit function stood up by the first anniversary of your IPO. So immediately after we IPO'd, the effort was to actually find that internal audit head and engage a third party to be the almost like a lone staff or a team extension to serve as internal audit team. And then as far as SOX goes, I think PowerSchool was pretty good in that they already understood and they already documented the controls. The long pole was around the IT system because, to me, that one's the biggest lift. Because if you scope in certain systems that you're not ready to, you can get into a pretty bad spot.
What kind of impact does that have on a software company or in a system that, like a homegrown application that's relevant for financial reporting? Like, what does that change for the team that manages that application or system?
How it changes is if it is homegrown, there's definitely a lot more scrutiny around the controls that we put in place for the systems for the systems to continue having and maintaining its integrity, right? So, for example, if you have an outsourced system, then you can rely. Well, I mean, you still need to do some work, but it's a lot less because you rely on their controls audit report that says that the controls within that system is working.
Yeah, and for listeners, that's typically called like a SOC 1 report.
The SOC 1 report, yeah. I feel like in SOX, you're more likely to get a significant deficiency or a material weakness from an IT system than from a business process controls not working or not being designed well.
And that's like is it really like every code change has to be reviewed?
I don't know the nitty-gritty of that, but yes, there needs to be a control around change management, because you don't want a change within the system to actually affect the integrity of the data and the outputs of it, especially if the outputs are something that you rely on for financial reporting.
Mm-hmm.
Right. And, remediating significant deficiency and material weakness within IT is a long process. So,
Yeah. Just for our listeners out there, some of the things I've seen that may or may not work for your companies, but maybe something to consider. When you have an application in scope, there's a lot of code changes that still occur even after the application is live. And so sometimes some companies, they will classify those changes as minor or major. And so if it's a minor change, it's not really that important. Like we can push it through. There's not as many controls that you need over it. But if it's a major change that may impact the data integrity that's used for reporting revenue or reporting some other metric that's important to the financial statements, that's when it's something that you need to get reviewed. You've been in, I haven't taken a company public yet, but okay, so let's just say you get a significant deficiency or a material weakness in ITGCs. Do people care? Does the board really care? You know what I mean? At the end of the day, the stock's already out there. People are trading and selling it. How does it actually economically impact the company?
I mean, I think I don't know how deeply people look into this. And again, I'm an accountant. Of course, I am going to look for significant deficiency and material weakness in filings, right? So I can't really tell how it does or does not impact the stock price, but it definitely calls into question your readiness as a public company, right? Because if you're a public company, you'd better make sure that all of these things are reliable, that it's going to produce a reliable result. So you just don't want that doubt out there that, oh my gosh, the IT system is not working very well. Oh, you don't know how to manage changes very well. Oh, your access control is not very good, right? So, you definitely want to get all of those things buttoned down before your first SOX filing.
Yeah. I mean, I've heard a couple of things on how to think about this. Wall Street Journal will from time to time report on these matters when the company is significant enough and the finding is significant enough. This has to get reported on your public filings registered with the SEC. So investors see it. It adds to your litigation risk potentially at the board level, right? So investors could sue the company because they saw that there was a material weakness and you couldn't rely on the financial reporting that you did. So you need to give me money back for this unrealized loss that I had or this realized loss that I had. So yeah, I do think downstream there are some impacts there.
Oh, for sure. And then when you mention shareholders lawsuit, that reminds me of another impact, right? Because when you first become public, your DNO, directors and officers liability insurance just go through the roof. And as you become mature as a public company, you see the premium going down. That's a real savings, right? But if you have an instance of, like a potential threat of shareholders lawsuit, that can be part of the consideration when insurers come out and give you a quote for your next DNO.
Yeah. And then if you have a really high DNO insurance, it kind of makes it tough to fill up the board sometimes with the people that you
absolutely
want. Yeah. So
yeah. No. So there are these long-lasting impact, right?
Yeah. All right, let's end the show with something fun. We call this segment "Controllers Are Fun Too." I mean, I would love to hear about a funny accounting story that you may have.
I am still debating whether controllers are fun, but I could.
By the way, the answer is no. We're not. We're totally not fun. Just to be clear.
But I can probably tell you about my most unusual expense reports, and this is one of the last expense reports that I submitted at Power School before I left. So I'll preface it by saying that the T&E function rolled up to me within the CAO organization. And I mentioned earlier that we have India Shared Services Center, right? T&E is one of the functions that are performed out of the India Shared Services Center. So we have somebody there that's doing the day-to-day operations of expense report review, approval, and reimbursement processing. It's part of the AP function. So I went to India earlier in the year. Didn't meet the guy, unfortunately, as he was not feeling well the week that I was there. But I heard from the team that he's very diligent and he takes his work very seriously. He has a lot of pride in his role and basically just an all-around great team member, right? I mean, great. Like who would want people? Who would not want people like that? Anyways, I didn't know the extent of how seriously he takes his work until I came back stateside. And a few months later, I submitted an expense report that got rejected because a 24 cents misclassification. So it was a parking fee that's somewhat embedded within a hotel folio that should have been broken out.
Yeah.
So, of course, it got kicked back to me. I resubmitted the expense report and I got paid. Yeah. And then, later on, I was talking to the team about it and I was like, well, you gotta hear about this 24 cents misclassification thing.
Yeah.
And then my team was like, well, you know what? He rejected the expense reports of our CEO and most recently our CPO, our Chief People Officer. And his reason, because you need to put in reason for rejection, his reason was that this Chief People Officer's expense reimbursement was not being made in accordance with HR policy. And I was like, but she's the one that made the HR policy.
Oh my gosh.
I know. It was a plain internet fee reimbursement that was above our limit. So
there's two sides to that coin. I think being on this end, it's not the most pleasant experience.
Yeah.
But you got to respect the fact that the guy takes his job seriously.
I know.
Right? Like that's the one person that controls kind of a little bit of the culture on the corporate spend.
Yeah.
And so if you have someone that takes it diligently, you can actually have a good impact across the board on just being a little bit more responsible on your charges.
And make sure that the policy has teeth, right?
Right. Well, Angela, it was great to have you on the show. Thank you so much for taking the time.
Thanks for having me.
Thanks for tuning in to Controllers Classified, presented by Brex. Brex is an AI-powered spend platform with global corporate cards, expense management, reimbursements, and travel. Visit Brex.com and follow Brex on social to see how they can take your accounting game and your company to new heights.